Hi guys, thanks for tuning in to another episode of Nuggets News. Today we're doing some last minute tax tips with Adrian from Crypto Tax Australia. How are you, mate?
Hi, Alex. Thanks for joining me again.
Yeah, that video went down really well, so thanks for helping everyone out. And it's coming up to another important date, October 31st. So, what do people need to know before that date?
Yeah, so, some people might not be aware, but 31st of October is the lodgement due date for those people that are actually lodging their tax returns by themselves. And I know a lot of people now in the Australian public, they like to do their tax return themselves. So if you jump on places like MyGov or eTax, you can start lodging your tax return until then. But as we know in the crypto space, sometimes things get a bit more complex. So if you're registered with a tax agent, you can actually extend that lodgement due date out, which gives you some breathing space as well.
Yeah, so I guess that's the first tip today, guys. If you need an extension, get registered with the tax accountant because otherwise, October 31st is technically that deadline.
That's right.
What are some other tax tips you've got for us today, man?
Yeah. So look, there's a lot of sort of questions I keep getting asked, even though we're sort of 4 months into the tax year and the ATO's got their guidance out. And probably the main one is that I get is, do I need to declare? And the short answer is yes. And obviously there's a couple of reasons for that. And the main one is of course it is your obligation, to declare either the income or the gain or the losses. Okay, so it's important that you do that. And uh, the reason for that is because it actually can benefit in your favor. Okay, I know a lot of clients who've actually invested along the way, and unfortunately, due to the hype and this downturn in the bear market, people have lost money, and that doesn't necessarily mean that you shouldn't be declaring that or incurring that loss in your tax return, because later on, when hopefully we see this bull market run up again, you can actually utilize some of those capital losses for the gains in future. Now, if you're a trader and you've held on to your crypto all this time, or you've taken profits or whatever it might be, and you end up in a loss position, if you satisfy certain conditions, you can actually reduce some of that loss against your other normal, PAYG income, and get that tax benefit there. So it's really important that you do so. And I've spoken to the ATO multiple times, and I've gone to a lot of conferences where they've actually attended and they've spoken, and they're already tracking people through either social media or talking to the Australian exchanges. So it's just important that you do the right thing, and especially because you might be actually be getting a benefit out of it as well.
Yeah, fantastic. Cool. Good to know. The exemption, the personal exemption, this is one that's still getting talked about a lot. And I guess from my interactions with the ATO, they're telling people that this is a pretty specific set of conditions or criteria when someone can use it for personal, and you fall under that that definition on their guidelines.
Yeah, so it's a little bit disappointing that the ATO hasn't come out with some further clarification or real life examples about that whole exemption. And some people still getting confused that, if I haven't invested more than 10 grand, do I have to declare? Or, I've used it for personal use. It's not subject to tax. Now, the ATO's guidance doesn't really clearly state that that is how the law works. As we sort of talked about in our previous video, Alex, the longer that you hold on to the crypto, it's all about your intention. So if you invested back in, July, August, or whatever it might be, you've held it on for a year, and now you said, oh, look, I'm going to pay some bills, or I might buy a car, or whatever it might be, then your intention from the start was actually to invest. Okay, so you need to understand that. Now, I probably want to give more of a real life example. So let's say you're going over to Japan, for instance, and where it's legal tender over there. So you might want to put some Bitcoins or Ethereum, whatever it might be, on, say, like an Ethos mobile wallet. And you go over there and you might want to start paying for, food and a restaurant or some gifts or whatever it might be. And that specific wallet is actually only used for personal items. So if there's fluctuations in the price between when you've actually distributed those Bitcoins over to your wallet, and there's a fluctuation in that price, then that could probably be seen as just personal use. Okay, so that's probably a bit of an example where you can use that exemption.
Yeah. So having the one wallet address, having the intention, it's all got to be very clear from the start. Yeah,
that's right.
Should people be keeping records? I guess this is probably the obvious one, that everyone should be keeping records. And how do you recommend people best do that now? Exchanges getting better, software's getting better.
Yeah, look, sort of as time goes on, a lot of people are saying, I've lost my records, or I can't get access to my exchange, or I've lost my 2FA, whatever it might be. And that happens, okay? Whether it be because you've lost your phone or whatever it is. Good practice is, let's say once a month, you go over through all your exchanges and you'd start downloading some of your transaction history, okay? Because whatever reason it might be, you might not gain access, and then you've lost those records forever. And having a good practice like that also has some tax benefits, because in practicality, when you're working out your tax return and the capital gains or the trading, if you don't have those records, the only sort of most practical way is that you're assuming that crypto that you purchased you purchased it basically for nil, because you don't have any other supporting evidence there. And it's really important to, if you have lost, access to that exchange, or the exchange has been closed down, you can clearly substantiate that and say, look, I've made an attempt. These are all my emails that I've tried to actually contact Binance or whatever it might be, to say, I can't get access to that account anymore. And it's really, really important to do that.
Yeah, and these days, if you email those exchanges and they send you the Excel or the raw data, then you can give it to someone like yourself and help people do it. So you don't have to stress necessarily, guys, working it all out yourself.
That's right. I mean, we prepare all that for you. We've done it hundreds of times now, so it's not a huge daunting task for us, but it's also for your own benefit, because if you're keeping records along the way, and as a trader you should be, because that's sort of one of the requirements of being a trader, to keep accurate records, but it also allows you to make more informed decisions, because if you know where your positions are, or how much what you've made and what you've lost throughout your trading and investing, you can actually make better decisions. And it's also really, really important to note down, if you've started investing in ICOs, or used decentralized services like Shapeshift or Kyber Network, it gets very sort of tricky when there's no real trading history. It's more of a withdrawal of Ethereum, and then you might have a deposit of, say, MESA Go or whatever it might be. So having that record on the side is going to help you, say, 12 months down the track, because sometimes you can't even remember what you've done last week. Yep. It might be 12 months down the track.
Cool.
Right.
Best tax structures was the next point I've got here, mate.
Yeah, so a lot of people have obviously invested in their own personal name, and a lot of exchanges only allow you to do so. Some exchanges, you don't even have to put your own name. You just need an email address and a password, and off you go. But what I probably recommend to people who are investing is, think about what your long-term goal is, okay? Some people are traders. Some people are getting into trading, and if they're trading in their own name and they've already got income which is high, $80,000, $180,000 worth, you're already paying your 47% tax rate here in Australia. If you're in a company structure and you're serious about trading, your tax rate is automatically reduced to about 27.5%. So you could be saving between 15 and 20% there. So that's an item that you need to have into consideration, whether or not you want to go down that line and if you're serious about it. And on the flip side, there's some investors that I speak to that say, look, I'm not going to sell for 5 years. So if you're not going to sell for 5 years and you're in a situation where you've got a family, you've got a wife, kids, and you might be the sole income earner, you don't want that crypto in your name because you want to keep it in something like a trust structure, which allows you to keep the crypto on behalf of yourself and the beneficiaries being, your family members. Later on down the track, when you do go to sell that crypto, you can say, look, I want to distribute that income to my wife or my kids who are on a lower tax bracket. And, it's all about what's best for the family.
A lot easier to disperse profits out of a trust to people, beneficiaries, and so on. Yeah,
that's right. And you still get the 50% discount, which people are obviously really concerned about if you keep it in a trust structure. So
yeah, cool. Super is another structure, I guess, that a lot of people have asked us now and gone through our partners at New Brighton Capital. Just speak to the professionals, I think, guys, and it's only a phone call to make sure that you're doing things right before October 31st.
That's right.
Any final tips?
Look, probably what I've been running into the last few months is making sure you keep a separation of your crypto investment portfolio. Some people have your long-term holds, some people have their trading account. Now, you don't want to start getting that mixed up between the two because it gets really, really difficult to start seeing which assets are actually for trading, which are investment purposes, and for tax-wise, it gets very confusing. So what you might want to do is you actually have separate exchanges or separate hardware wallets for the different types of investments. And if you want to get friends and family in, the best way is actually to help them, sign up to an account. Don't start sending them, Ethereum or Bitcoin to get them started, because that starts creating other tax adjustments, or you might send it to your wife and all that sort of thing. Help them sign up to a CoinSpot or a BTC Markets or CoinJar, whatever it might be, or a Coinbase, and at least that they've taken that first step. Okay. The other issue I just wanted to quickly touch on, Alex, is planning. And unfortunately, I've seen it firsthand from some clients who have made some money in the big run-up, as we did in October, November, December, Jan, and they've held all the way down. And unfortunately, if you're an investor on capital gains, you don't actually realize that loss until you've sold. So it's really, really important, and make a note coming up to this financial year in April, May, June. Speak to someone like us or an accountant that can actually go through some of your trades and say, look, you've made these huge run-ups for capital gains in these terms. You might want to start reshuffling your portfolio or sell some positions down, because you might end up with a huge tax bill.
Yeah, cool. Well, I appreciate you joining us as well, Adrian, and the discounts that you give all our viewers, guys. So head over to cryptotaxaustralia.com, and Adrian and the guys will sort you out.
Yep.
Thanks, Adrian.
No worries. Thank you.
Cheers, guys.